say expenses, that would be car repairs. That would be car washes. That would be um, anything to keep that car running in good condition. So you have that, you have the other. Whichever is the higher, that's the one that you can take.
Okay.
If you depreciate your car, then you can't take mileage. So that might make the difference there. If your car is new, then you might want to take depreciation and actual because that's going to do far more than the other. The good news. Always pay yourself, especially if your spouse works for you. I have clients in which they work together. I had a meeting with a client, and they had some, I've seen some good arguments over that. Human nature is I work hard, I want to see that paycheck. And even though it's going into a joint bank account that they can take the money out of, there's something about having that check, that piece of paper with your name on it, that you can do whatever you think you're going to do because you're going to put it back in there anyway. That helps. And so I tell people, always pay yourself because now you know that this business is worth it. You get into business to make a profit. You pick that business because you like doing what you do, but never get away from not paying yourself. You always want to be paid for your work, and that makes the whole thing really rewarding. Now, one thing that you may think about, and this one I use as a caution, hiring your family. It is, here there are pluses and there are minuses. And a plus, if you hire your child, you can take a $5,700 deduction, or actually $5,700 could be tax-free. You can pay them. You give them that check. They don't have to file. You get that deduction. You get the best of both worlds.
Wait a minute. So I hire my daughter, and I pay her $5,700. Why is that figure? What's that figure?
Well, that's the maximum amount you can have,
okay.
and be able to claim them. They don't have to file, and that's a number kind of arbitrarily they give you.
Okay. I kind of like that. I mean, I don't have any children, but I have a niece.
Okay.
Doesn't count?
That
No,
may or may
okay,
not count. Now you can hire your spouse and not pay Social Security on that. Now, again, good and bad. Again, hiring your spouse, you have to be able to leave that business at home when you leave. Also, if you don't pay Social Security on it, your spouse does not get Social Security.
Yeah, that's a big issue, isn't
so
it?
it's good and bad, but that can save you some money. But the bigger issue is that hiring family is tough because then disciplining that family is a little tougher. It could leave those deeper feelings, and you have to keep that.
So we're going to have you tell us your contact information again, and then we're going to do a recap.
Okay. Well, it's contact me, Anthony Sykes, my local number, 562-864-2341. Visit our website, www.sykesaccounting.com. Follow us on Twitter. Join us on Facebook. Connect with us on LinkedIn. I would like to hear from you.
Thank you.
Now, the 7 tips that you want to keep aware of so that you can take the best deductions is you can hire your family. There are pluses and minuses, but it can mean as much as $5,700 per child that you could have tax-free. Pay yourself. If you don't pay yourself, you feel like you're not really in business, your business isn't worth it, you'll get depressed. So always pay yourself. Keep track of your mileage. You want to do that as well as your auto expense because if you do, you can deduct the higher of the two. But more importantly, that is a hot audit topic, And if you're audited, you don't have it, you don't get it. You can deduct your health insurance. It's kind of a double-edged sword because if your spouse or you have another job that pays health insurance, you cannot deduct it off of the front page of your return. It will not reduce your gross income. But maximize your home office deductions. Set that office up in your home as an office. It can't be used for any other thing except your business. So if you're in the entertainment business like you, yes, it may need a TV, excuse me, so that you can view programs, see the competition, and so on. But you justify that. If it's done correctly, you can take a percentage of all your household expenses, and that could be a lot. Your startup expenses, calculate those. How much did it cost to start up this business? Keep track of it. Then you can deduct about up to the first $10,000. Now you have to start that business. You can't just say, I spent $5,000 researching and I don't want to do it. That may not fly. So you have to start business. Get organized. You need to get organized. You need to have all those receipts. You need to have your mileage. You need to have everything for that business. In this day and age, with competition being what it is, and also, more importantly, audits are up 400%. IRS is looking at Schedule Cs, especially if you have, let's say, a W-2 business, because they are looking at it as a way to, of you trying to take a tax loss. So you have to be able to justify your expenses. I advise everybody, if they're thinking about going into business, they have that entrepreneurial fit, to think twice. It's great, but think about what you want to do. Is this really what is your passion? And can you make money at it? If you feel you can make money at it, you know what your value is, then, hey, go out and do it. Love to see you, talk to you, give me a call. We always offer an initial complimentary consultation, and hopefully we can help you.
Yeah. Thank you so much, Anthony. I'm C. Deborah Thomas, and you know we are about being literate here on Literary Speak. And so Anthony has just told us, given us 7 tips, tax-saving tips for a home-based business. And he's also talked to us a little bit about starting that business that we all have to really think about, because we've seen in the last year or so that working for someone else is not necessarily the most reliable thing to do. So starting a business is a good option. I'm C. Deborah Thomas. Thank you for spending some time with us, and we are glad that you want to be literate in your taxing issues.